welcome to the 8th episode of coffeepechaHRcha, and thanks for all the great feedback and suggestions that we have been getting on this series. Today, this is going to be another power pack session where we are expecting a lot of good insights coming, and I'm really delighted and happy to introduce our guest today, Suhail Sameer. Hi, Suhail.
Hi, how are you?
Good. So quickly before we start, asking Suhail our set of questions, a quick introduction. So Suhail is in his most recent avatar, he recently joined Bharat Pe as the group president. And when I see Suhail and I think of Suhail, I see a kind of a 360-degree person who's done pretty much everything. He's an entrepreneur, having set up businesses from scratch at RP Sanjeev Goenka Group, where he set up the FMCG business. He's an investor and he works closely with a lot of startups and mentors them. He's a business leader, having worked in various organizations in a leadership role, especially currently in Bharat Pe as well. And to top it all, he's also a management consultant who worked with the best management consulting firm there is, which is McKinsey. So, and he brings a rich experience of over 15 years in various sectors. So Suhail, thank you and thanks for accepting our invite. How are you doing? Hope you are staying safe.
Very well, yeah. Very well. Staying safe, back to work, and my pleasure to be here on the conversation.
Great. So Suhail, I think the first thing, obviously, I have to ask you is Bharat Pe and the payment space, right? And payment space is one of those spaces which is almost evergreen. There's some disruption happening all the time, right? Over the last decade, we have been seeing this space evolve. And with Bharat Pe, which is more on merchant side, is what I understand. I would love to hear what gets you excited to be part of this Bharat Pe journey and the payment space. And what are you guys building? What's like your vision in terms of Bharat Pe?
No, absolutely. I think an incredibly exciting space, payments in general across categories and online, offline. I think at least at Bharat Pe, we are super excited about the offline merchant space. And I think there are enough people who are playing in the market on the online space, whether it's the payment gateways or whether it is the wallets. What we really want to do is to actually make payments easy to accept and free for all our merchants. And we want to bring in capital to sort of this merchant base, which is typically, as you'll probably know, the most capital starved, and they don't get credit. They historically don't have necessarily they don't have historically the credit history to be able to access bank finance, etc. Right? So I think we are extremely focused on like sort of helping this class of merchants become financially independent and like sort of help them go digital in a way in terms of at least the payment acceptance and avoid cash, right? So that's sort of the mission we are going after. I think at the core of our philosophy is the fact that we believe that payment should actually not be charged, right? Payment should be free.
Yeah.
It's counterintuitive to say that India wants to go digital, where you are charging anything from 1 to 1.5% for payment acceptance, right? So why should a merchant do 50 transactions and his 100 rupees should swindle down to 40-50 rupees after paying all the sort of intermediaries in the process, right? So that's where the thesis started. How can we make payments free? And as you probably know, we started with the UPI-based, QR code-based payment acceptance. And the philosophy has always been that we will make payment acceptance free. And so therefore we started with a free QR-based payment acceptance. We were the first ones to make it free, even before the government mandated it. I think as we went along 5-6 months after we doing it for free, I think, and that's where government sort of made the UPI free, right? So, and again, as we go along, we are figuring ways on how we can make other forms of digital payment acceptance free as well for the merchant, right? So taking the leap from the RuPay cards, which government has introduced, where sort of card payment acceptance also becomes free, we are also thinking along the same lines. The core thesis is an Indian merchant has very little margin he plays with anywhere from 6-7% to 12-13% margin. And if you like sort of take away 1 to 2% out of that for just payment acceptance, that's just brutal on him, right? So, and that's the problem we are set to solve.
Yeah, great. And Suhail, I mean, I always wonder, and someone who is not directly from this space, as a more of a curiosity, is that I believe your merchant base currently stands at around 4 to 5 million. Is that a right number, approximately?
Yeah, absolutely. Yeah, around 5.5 now. Yeah.
Right now, what is the bigger problem to solve? Is it the access to these merchants who possibly can take on your solutions and the entire gamut of offerings that you have, or is it in India, is it still more about awareness and education that how this can help him and sort of get him more literate on the financial management side?
So I don't think access to merchants is remained as big a problem, right? So I think thanks to the learnings people have had through how FMCG has grown in the country, it's a very similar access methodology, right? So you just have a combination of digital ways of reaching the merchant and sort of a physical ways of people on the road going merchant to merchant and onboarding them, right? And the onboarding process, etc., is very, very simple. I think what still remains the challenge is two-pronged. One is just the awareness on how UPI works, explaining to the merchant on how can he sort of get the money back into his account, how the settlement works, the technology of like 1 or 2 bad experiences where settlements have been delayed and people just getting worried because these guys are still new to the banking system. These guys are still new to digital cash. I think just making them aware of how this works, making them aware that this is free because they're also been historically charged by everyone from a wallet company to a credit card company, just making them aware it is free and hand-holding them through the process. And what we've realized is as a merchant sort of goes through first 15-30 days on the platform, and if you're able to handhold him through that journey, then the merchant really stays, right? And by that time, he is fully aware of like how this works. He's comfortable with using this as a payment mode. And once you have the first 15-30 days done, we've seen like stickiness of merchants as high as like 99% right? So that's sort of the core of it on how do you sort of handhold him, how do you educate him in the first 30 days.
Mm-hmm. Interesting. And what's the appetite for credit? I mean, because you guys also offer loans to all these merchants. I mean, and
yeah.
I think this is something new for them as well. Someone coming in a more formal way, offering them loans. Do they understand the whole concept, and are they like getting onboarded to this idea? Or is there a challenge there?
Yeah. So I think credit is a easiest sell. In fact, we don't even call it a sell. It's we always have more demand than the amount of credit we can give. These guys are used to credit, right? These guys are used to credit from distributors. These guys are used to credit from their neighborhood sort of money lenders, and who charge them exorbitant rates and sometimes even want some sort of securitization, right? So whether it's gold, whether it is like some household equipment, whether it's a vehicle or sometimes even a home. So I think, and this category always has huge credit requirements, right? If for nothing, for working capital at a minimum, right? So in general, we are not worried about credit demand. It is incredible. I think what we are really worried about, can we underwrite that credit demand, right? And the way we underwrite that is based on merchant activity on our QR code. So therefore, actually, the only constraint to credit is how many merchants can we get onboarded, how many merchants can we get through the first 60-90 days of transacting on the platform, and how can we help them transact more and more on the platform, because how much credit they get is a function of how much transactions they do on the platform, right? So therefore, if I were to like not take that as a constraint, I can actually give like literally 90% of my merchant universe a loan tomorrow. But we also want to do this thoughtfully, and we want to ensure that the merchant goes through the steps where we feel comfortable that he's credit worthy, right? So, and that's what takes time. Otherwise, sorry, yeah. Otherwise, we are sort of not constrained on the amount of credit need, and I think that's one part of the business which merchants understand incredibly well.
Yeah, and it's a fairly sort of a tightly coupled value chain where you know what are the payments coming in, so you have fairly good data and idea as to what is the business activity happening at the merchant's end, which gives you that added comfort to extend that line of credit to that guy.
Yeah, and we've historically seen, I think, this class of people really wants to pay you back, right? And this is eventually their business. If they can get access to formal credit where they don't have to securitize it by giving their prized possessions and at a rate which sort of works for them, I think they really look as this as an enablement of their business, and therefore they would not like to sort of default on payments, right? And that's very reflective in our collection numbers. Obviously, COVID had a bit of a toll, not because people didn't want to pay, but because given our collection mechanism was QR based, and if the store is closed, how will we collect, right? And we've seen post-COVID, as stores have sort of reopened, these guys have started paying on their own, right? So I think the payments and the collection part of the business is extremely well understood, and it's like extremely value creating, even for merchants who don't understand digital payments as of yet.
Brilliant. I mean, I can go on and on talking about this. It's very exciting even as a conversation, but I think let me also switch gears and bring in some new discussion in this. So Suhail, one of the things I always wanted to ask you is and I typically ask pretty much all the guests that we have in this small cities that we have, is what's your sort of a guru mantra, or what's your take in terms of building great teams, and especially in the context of early stage companies, right? I mean, early stage unfunded, early stage funded, irrespective of that. And what are some of the do's and don'ts? Because the reason I'm asking you and is even more so because you have seen a lot of startups in your circle doing the right things, and a lot of startups doing the wrong things when it comes to building great teams initially. So what are your do's and don'ts and guidelines for a lot of entrepreneurs?
Fair. No, I think a few. In the interest of time, let me just talk about two do's and a few don'ts. I think one do's is I prefer a lot of generalists, right? People who can do multi-hatting, because businesses at this stage evolve so fast that that you don't know what is the right skill set you need in terms of just the functional expertise, right? So therefore, I don't over-index on functional expertise. A lot of these businesses are quite intuitive in a way. So what you really need is people who can sort of don multiple hats and get it going. I think the second is the hustle, right? So we move at a pace where sometimes I get sort of like lost on what all is happening and what all is on my plate. So I think if there are people who can't move at an incredible pace and still like sort of not lose their cool, I think that's an important sort of ingredient, at least to me, right? And you need people who will like sort of raise their hand and say, I will get it done, because not everything can come back to the founder or the senior leadership, right? So I think these are the two things I really look for. One is just a generalist, high problem solving intensity mindset, and the second is like sort of willing to hustle and willing to say, this is the biggest area of weakness, let me raise my hand and get it done, right? So I think that's two I focus on. What I typically am also very guarded about while I look at hiring is I think one is a sense of entitlement, right? Ki mera designation ye hai. I think if anyone sort of gets into a designation conversation, into like will I get, which office will I use, will I have a secretary conversation, I think that's just like not very comforting, at least to me, especially in the type of setups where you work, where you sometimes play a role which is 2 levels below your pedigree, and sometimes you have to like step up and play a role which is 2 levels above your capability, right? So in a setup like that, people with a sense of entitlement don't work, right? And there are great industries out there for them, but not necessarily like a great fit, at least in my team. I think the second thing is like sort of it's tough to explain, but it's like a sense of shared identity. People who don't look that, a lot of individualistic people don't necessarily do well in a setup like this, right? So they will do great in many jobs, right? So they will do great in many well-established companies where you know exactly what you have to deliver and you're doing that day in, day out. But when you're working in an early stage company, I think shared goals take sort of precedence over individual small wins, and sometimes you have to like drop everything you are doing for yourself and like sort of help enable someone else in your team to achieve his goals, right? So I think people who take a lot of pride in individual achievements versus collective goals don't necessarily working too well in our setup. And I think the third I don't think it's a space for perfectionists, right? So this is a space which moves so fast that if you do 10 things and you get 7 right, I will say great job done. Versus I have to get everything right. I need a foolproof product to take to market. I need like 50,000 sort of triangulations before I feel confident that I can sort of deliver this. I think this is a space where it is better to sort of launch fast, learn in the market, and like sort of then come back to the drawing board and course correct versus getting it right in the boardroom, right? So I think if you're a person who likes to be a perfectionist, who would rather get everything right before it's taken to market, I think at least tough to sort of succeed in at least in my teams, right? Because I expect great intensity and great speed to market.
Correct. No, makes sense. And just as a follow-up question, and you know, some of the people I asked this question found this question a really tough one. Is how do you really identify these guys? I mean, because it's really tough to kind of get this deep understanding. I mean, most of the time, this is something you realize when you hire him. Now, in that brief evaluation process, I mean, you can have an elaborate evaluation process, but even that would be too small to judge a person for this kind of competency. So how do you go about it?
Yeah, I think, and I've also realized for some of these things, there is no rocket science, right? So, and it's also tough. Like, I mean, if you like, spend a lot more time on it, you will not necessarily get a better answer, right? So a lot of this is probably a combination of your gut saying on how this person operates, and a lot of it is down to just talking through what the person has done, how varied his exposure has been, how he has sort of seen failure and how he's reacted to that. I think you can ask like tons of questions around personal experiences, which give you a glimpse into how a person might operate in the setup. But having said that, even after like I like spending like a 40-50 minute conversation, I normally don't ask anything related to the work, right? I maybe ask one question on why do you want to do this and what do you find exciting in this, but most of my conversations are just to try and understand the personal motivations of the person. And I am reasonably sure I still get it like 1 out of 3 wrong, right? So and that I think is unfortunately part and parcel of the life. I think like hopefully 2 of the 3 people succeed and do really well, and hopefully at least half of the people who are not naturally fit to do this, you are able to like sort of work with them, coach them, and like sort of get them into the mind frame which you want them in, right? So but there's no way to get it right. I have like had I've had multiple instances where I've really liked someone, and 6 months working with them or 3 months working with them, either they have themselves realized this is not the space for them, or I have realized that this may not work, right? And I think in those cases what's really important is how do you help the person figure out what he really wants to do and help him sort of land there, right? Versus like taking knee-jerk firing decisions, right? So and I think most people have become smarter about it. They've realized that startups is not necessarily a game for everyone.
Sure.
And everyone wants to give it a shot, right? Everyone wants to work in an early stage company. It sounds very exciting, but I think till you do, you also yourself are not very clear whether that's the space for you, right? So therefore, you have to leave that room for error, and whenever that error happens, you have to sort of navigate through it in a way that it's best for the company and best for the person who's sort of on the other end.
Yeah, the uncertainty of it, it's tough. I know. Sohail, I think as we speak, we are in very interesting times with the two C's of COVID and China, right? I think, obviously, I don't want to have a political or sort of that kind of discussion here, but more around the impact it is going to have on the Indian, entrepreneurial or startup ecosystem, really. And some of the things that I've been hearing and would love to hear your views on this is, this is almost like a hard reset for everyone in terms of, everyone is at the same level, and there are new need gaps that are evolving and surfacing in the market, and possibly it's a good time for the entrepreneurs and a kind of a blessing in disguise. So what's your view on this? How do you see this panning out? Is it just a minor speed breaker, or do you see it is going to, change the way we are moving ahead in a big manner?
Yeah, I think every disruption sort of creates problems for a few businesses and creates opportunities in a lot more areas, right? So I would at least think of this in a similar way, and think of this as something which has created tons of opportunities, right? So my old sort of industry, FMCG, and I've been talking to a bunch of people in that and trying to help them navigate through those things. If you look at sort of how consumer health, hygiene, and like immunity category of products have sort of grown, and they will continue to grow, and it will just create series of like sort of categories which didn't exist in India or were very, very small, and they will all become multi-billion-dollar opportunities, right? So and which is reflective in how all the large companies are also jumping on the bandwagon. Everyone has sort of launched a health and hygiene category, everyone from ITC to HUL to like whoever, right? And similarly, it will create tons of opportunities for startup founders to create really cutting edge products in these areas and brands, which will hopefully sort of really, really scale. Make in India clearly will get a big boost due to whatever the way we are thinking about China. So I think both COVID and sort of China episode, rather than focusing on the negatives, I'll say that there are tons of sort of industries which will get created. Many industries which existed because we'll get a big flip because of the government incentives, etc., etc. I think the one thing which sort of still worries me is the early stage company funding, and a lot of this money does come from China. A lot of this money does come from international countries, whether it is pooled in Mauritius or Singapore. And I think rather than sort of blocking this capital, I think we need to really figure out how to sort of scale the domestic pool of capital, right? So we've been having these interesting conversations on even the tax regime, on if you are an international pool of capital, you pay lesser tax versus an Indian pool of capital. That just is a bit counter to what you are trying to achieve, right? So if you, the objective is not to block China capital, the objective is to sort of ensure that Indian ownership in Indian companies sort of scales, and for that you have to create the right tech structure, the right sort of incentives for angel networks and funds to really raise capital from India. And I think government is already thinking along that lines, right? So sometimes this takes a bit of time because this is multi-ministry coordination and everyone has to sign up on it. But I think if that sort of also is enabled along with all the other actions being taken, I fundamentally believe this will be hugely positive for India in the medium to long term.
Yeah, and I believe some of this policy work will get accelerated by the current circumstances, because what the problems that you're saying will surface a lot more now than ever before, with some kind of capital getting blocked from China and other places. I think
absolutely.
That should actually raise urgency.
And absolutely, and like I think the good thing about India and Indian government is once we sort of put our head down to something and we are committed to delivering something, we move reasonably fast, right? I don't know if you've been following what is happening in the chemical and sorry, am I still there?
Yeah, you're there.
You
Yeah.
lost me for a bit.
Just
So.
that's
But if you've seen what is happening on the chemical and the pharma space, on the API space, I think government basically said we are probably the second best country, if not the best country on this space in manufacturing. And why are we like sort of so much resorting to China? And just the decision on putting this industry on focus and giving them the right incentive structure has seen huge changes on the ground, right?
Yep.
In just a very like short 3-4 month period. I think as a country, we also have to basically say what are these 4-5 areas which we are highly capable in, or for strategic reasons want to make our top priority, including obviously the startup universe and like who invest in this. And once you have those 4-5 and you have like sort of the right incentive structures defined and the right policies defined around it, I think as you said, I think this will become hugely positive for those set of industries over the next few years, and we will see a lot more entrepreneurship coming out of India because of whatever we've seen in the last 6-12 months.
Great. I mean, yes, you're right. I mean, the government has to kind of put their head into it, and once they do it, mostly the results are really good. Whatever we create, the policy framework is good. So Suhail, I think thanks for your time. I believe it was an interesting conversation, and we will stay in touch, and we'll be happy to host you again anytime in this show.
Absolutely. Thanks for having me. Take care.
Thank you, and all the best for the Bharat Pe.
Thanks. Take care. Bye.
Thank you. Bye-bye.